everybody's in debt dollars. And I said this from the beginning is like, China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is. They'll agree something because they need the weaker dollar because they need to roll their dollar debts. Everybody needs to export goods, and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar, and the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. Bitcoin has been dominant. It was dominant all up until this point in the prior cycles in 2017 and also in 21. It stays dominant much longer than everybody expects. And then it tops. And this is the monthly D mark. And we put in a 13 top. And if I switch that to the daily now, we are getting very close to having a 9 top. That'll be 2 days away.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. Raoul Pal and Jamie Kaufs break down how Trump's new tariffs could shake up the macro world in crypto markets. Big changes are coming. Let's watch and see what's ahead.
Which would match to me with the 9 on Solana as a bottom. There's a lot of things that are getting close to saying the liquidity cowbell is coming and the structure of the market may well change with it and usher in the next phase. So what I talk all about, the second phase of the banana zone, which is really often old season starts at this point. How are you thinking about the evolution of the market going forwards from here?
Yeah, I love when you bring up DeMark because it's a tool that I don't get access to. But it's also there's a lot of learning behind it too. You can't just pick up DeMark and just sort of run with it. There's real rigor in how to implement it too. But it's interesting because it's the mirror image of what I'm looking at with my breadth indicators. So I don't know if we can bring up this chart here, but as you know, for our Real Vision subscribers, I partnered with an index provider called Bitformance to provide crypto indices and sector data to all of the RV subscribers. In fact, we've now delivered the first dashboard inside the Real Vision platform.
That's on Real Vision Plus, right?
I believe
on the data center, correct? Yeah,
data center. If you navigate to data center, there is now a new tab called Crypto Dashboard. In fact, we could show this. Actually.
Yeah, show that.
Bring it up.
There's a lot of work gone into this, and it's really cool.
Yeah, so it actually has been. We've launched it, but there hasn't been much fanfare. Like we have not actually gone out and done a proper marketing video around it. But look, let's just show everyone today what it looks like. So the left-hand toolbar, you can see under the data center section that there is now a new tab called Crypto Dashboard. And so if you click in here, what it will provide is now sector level information. I think this is absolutely critical. I come from traditional markets, equities. You have a Bloomberg. Everyone in the space breaks down or has market composition frameworks for looking at things, whether it's through the sectors and subsectors. Crypto has been lacking that for the longest time. Now, I helped develop the Bloomberg version of this, but Bloomberg, in their wisdom, really haven't followed through. And in the meantime, S&P and various other index providers are stepping into the space. That's all well and good because that just means ETF providers can create products around this, and that's great for everyone. What retail needs is an equivalent. So this is effectively what that is. And you can see the performance across all the different sectors here. And if you break down the sectors into subsectors, you can really drill in under the hood and see which subsectors are taking the biggest hit, as it turns out right now, because the market's off. But we've also got a top 200 market cap index and a top 200 equal weight index. And that was the chart that I was going to show you, because when you compare these two different indices and their weighting regimes, you get a pretty good indication of breadth.
Arthur Hayes, co-founder of BitNEX, is excited about the impact Trump's new tariffs could have on Bitcoin. While many fear the economic shakeup, Hayes sees opportunity. He believes that tariffs will correct global imbalances and force governments to paper over the pain with freshly printed money, something that's great for Bitcoin in the medium term. Hayes didn't hold back, saying, "Some of y'all are running scared, but I loathe tariffs." The announcement of sweeping U.S. tariffs caused chaos in markets, with the Nasdaq 100 seeing its biggest single-day point drop ever. Hayes points out that a weakening U.S. dollar index, the DXY, and a potential weakening Chinese yuan could push investors toward Bitcoin. If China's currency slips past 8.00, he says, more Chinese investors may turn to Bitcoin as a safe haven. Hayes also predicts that the Federal Reserve could respond to the economic shock by cutting rates and restarting quantitative easing, adding even more fuel for Bitcoin's rise.
And it won't surprise everyone to know that the market cap index has been outperforming the equal cap weighted index. Why is that? Because Bitcoin is about 60 to 70% of the total of the top 200 itself. And there's been some other large caps that have actually done fairly well, like the Dino coins and even Binance or Binance Smart Chain. The point being is that it has not paid to be out the risk curve in crypto, really, for all of this cyclical bull market.
Yeah, there's been, as you said, there's been some outperformers, but the market itself has not outperformed.
It's been really tough. It's been really tough. And that ratio chart that I was showing is market cap divided by equal weight indices. And so
does that go back to 2017, Jamie? Or was it only start at 18?
It starts in 18. Oh no.
So you see, if I think about the crypto years, year 4 of the cycle being this year 4 of the cycle was 2017. Look what happened. Year 4 of the cycle was 2021. Look what happened. Year 4 of the cycle, we're coming in at the low, exactly as we did every time. It's interesting.
Yeah. The data is a bit patchy in that sort of 2 cycles prior.
Yeah.
But you can see here that there was a huge uptick in the sort of Q4 period as we went into ICO season and all the mania that happened right at the end of that bull market. And then the big move in the 2020, 2021 market started at the
Does it go back earlier in 2017?
No. It starts sort of that.
Okay, because it actually did come from much lower low. So we had 2 legs to the alts run.
That's right. Yeah, absolutely. I don't even think that the index was capturing the top 200 back then. So it sort of evolved over time.
Yeah.
But I guess the most direct corollary is the 2020, 2021 market, because the data is just a little bit better. And it was at the end of sort of 2020 that actually we saw that altcoin rally and outperformance. Now, in the last couple of years, in this cyclical bull market, we've seen 2 periods where altcoins have outperformed. It was the end of 2023, and that lasted for 6 months into Q1 of 2024. Then it rolled over again, and we saw into Q4 of last year a big move up. And I was talking about this actually at that point. I was writing research around sort of the breadth being extreme at this point. And we did get that rally, but obviously since then it's rolled back over. I think we're at another extreme right now in terms of sentiment.
Michael Saylor, the co-founder of Strategy, has stepped in to clear the air about Bitcoin's recent behavior. Many people noticed Bitcoin trading like a risk asset, moving closely with stocks. Saylor explained that this happens because Bitcoin is the most liquid and easily sellable asset in the world. During times of panic, he said, traders don't sell what they want to, they sell what they can, and Bitcoin is always ready to move. He also emphasized that this stock-like behavior is only temporary. Over the long term, Saylor believes Bitcoin will break away from stock market trends and prove its independence. His comments came just after Barstool Sports founder Dave Portnoy stirred things up online, questioning Bitcoin's connection to stocks. The post went viral, pulling in millions of views and reigniting an old debate. Adding fuel to the fire, Morgan claimed Bitcoin's digital gold status was fading since it keeps moving with equities. Some critics now argue Bitcoin is nothing more than a risky asset with little in common with gold. But Bitcoin supporters like Barefoot Mining's Bob Burnett have a different view. He pointed out that while Bitcoin can mirror the stock market in the short term, over longer periods, it tends to chart its own course. Despite heavy drops in the U.S. stock market, Bitcoin has shown real strength. Trader Justin Spitler noted that Bitcoin has held up incredibly well compared to the S&P 500. If the current risk-off mood continues, Bitcoin might even outshine traditional markets. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.